Hello traders, happy Monday, wonderful week to all. How you doing? Please give me some okay that you can hear me. How was your NBA playoffs beginning? Several good games. We had some disappointment here in Toronto after the first loss to Orlando. That was disappointing. So it was busy sports weekend. Was good. Thank you, Barbara. Thank you very much. Had some good time. Yep. Kids, friends came to visit us, so it was really good. Thank you. I hope you guys also had a good time. Welcome on board for the new members. Good to see you guys. Hi, Catherine. Catherine, you are not alone anymore from New York, right? We are getting bigger and bigger in the community. That's good. For all the new members that watch this live trading room for the first time, welcome, first of all, to our family. And I hope you will find here the quality and the value you are looking for, and that we will be helpful for you in your trading journey generally. Two recommendations: please go to the members area of the Traders Academy Club, watch the video tour so you understand how that works. Just 1 second. How that works generally in the members area, and of course, the trading report that you will receive after the live trading room. It takes some time to prepare it. Here you will find a summary of the live trading room, so please make sure to watch this video. It explains how to use the trading report. Here you will find the most important webinars that we have in the media zone to understand our trading methods. Of course, there are more videos than that, but that's the most important one, so you understand the language we speak here in all our trading terms. This is our watch list, so you basically what you do is you click on that, it opens the image for you. Okay, whatever it is, it opens the image for you, and you would be able to go and to see our trading idea. Below that, comments, little explanation, again, summary to what is explained in the live room meetings. Very important thing to mention, our preparation in the live trading room. When we have live calls, we discuss about them live. When we don't, we prepare our trading week or day if there is some short-term opportunity, more for Jordan, less for myself. The idea is very simple. Define the trading directions and then look to trade them. This is my personal trading approach. Multi-time frame scan. Define the directions I want to trade. What's for short term, what's for long term. Make an exact plan, and from this, follow up. Because when I define what I want to see from the market, I expect that to happen. If it happens, I know how I approach it due to the cycles technique. If it doesn't happen, I know I will have to go and adjust, right? Rebuild my plan. So that's my personal trading approach. So what we do here is preparing our trading directions and follow them and trade them. Now, how exactly you enter your trades are based on your trading strategies and systems. If you use systems, then according to systems rules. If you use signals or robots, according to its rules. If it's manual trading and you want to do it like we do it, that's where you find all the information. Okay, there are several ways to enter every single position in different market conditions. Different market conditions, different approaches. So let's begin, guys. We have the first ones. That's the European pairs. That's our first list, euro dollar. So what we were looking at after this convergence is for the euro dollar to finalize this move down and to start looking for buys. By ideal, we had this level. That's not correct. Where it came from, let's remove it. But we had a weekly level from this cycle, slightly lower. So by ideal, we wanted to see that going there and providing us the massive buy. Or not by ideal, we would prefer to see a false break or double bottom hold and turn around. How do we work with turnarounds, false breaks, convergences, and the principle of 3 higher highs, 3 higher lows, then retraces and buys. So the daily chart holds a double bottom for us. All that happens after the bullish convergence we experienced three weeks ago. Since then, the 4-hour chart basically gave us the 3 higher highs, higher lows we wanted to see. So the expectations for the euro dollar are accordingly correction and buy setups. What kind of corrections we can face here? First of all, the corrective cycle, right? So that could be 2 waves. This is the first wave of corrective cycle, or a range. It doesn't matter which of them comes. With bullish evidences of any of these corrective scenarios, we are for buys. Bullish divergences, bullish trendline breakouts, and so on, right? Every good bullish evidence. Alternatively, we could also go and face here some bullish hidden divergence. Will that work? 100% yes, because the triple cycle is a definition for a possible beginning of a new trend, and hidden divergence fits in exactly as a possible trend continuation. Daily chart supports us, weekly chart supports us, the divergence there is also bullish now. So 1 + 1 normally is equals 2, of course. This is just a metaphor, don't catch me on my words here. And we will be looking for these corrections and buy. Okay, so our plan for the euro dollar is this. Retraces, bullish evidence, looking for the buys. By the way, guys, if you have any question about anything I explain, please write it down. So once I finish with my explanation, I can go and explain it again with any of your questions. And another important note, I don't cover all the instruments because not on all of them I see anything good related to cycles. And also we can't really overexpose to all the possibilities. So I choose the ones that have basically the best match for possible developing trades. So this is for the euro dollar. The next one of the euros is the euro versus the pound. Our long-term plan here is bearish due to the triple cycle. The expectations for that are like this: 2 waves or the bottom of this possible range. We do not have any ending divergence on the pair right now. Therefore, the expectations are for continuation. To be able to trade the weekly, daily would have to fit in. What we faced from the daily chart was 2 waves and bullish divergence. At that very moment, a few weeks ago, the daily stopped being supporting the weekly direction, right? This is what we call separation or lack of synchronization. From this moment, we are expecting corrective cycle, shorter because the weekly is still bearish. What kind of corrective cycle can we face on the daily? 2 waves, and then we'll be looking for sell or a range. These are the acceptable corrective cycles. As for now, we are fitting still inside both. 2 waves still could go and be completed, and a range still holds. So both fit in. So how can we trade anything like that for a trend continuation? Because we are dealing with the weekly cycle and daily confirmation, the trading idea should derive from the 4-hour chart. The 4-hour chart, this is how it looks like. So assuming we are on top of the range, this is basically the cycle we are currently facing. Well, it's basically getting from bigger view here. So by ideal for the long term, this is the exact one we want to go and to look for possible trades. This is the big picture, and this is the one that where it all started from. So once the big trend line is broken, we are good for the continuation. The current trend line that we have here is basically what might allow us to trade the short-term opportunities. How? By matching, if it's assuming this is a daily range, right? Not a weekly, not just from a weekly, but we want to find short-term opportunities, we can. If it's a daily range for a possible continuation, and 4-hour chart fits in as a cycle, each of the 4-hour chart legs would have to be cycle by itself. Now take a look what happens. If we claim this is a cycle, there have to be a level. Do we have a level already on the 4-hour chart? The answer is no. Not far, but the answer is not yet. Each of the legs, let me just mark it correctly for you, here, like this. Okay, each of the legs would have to be a cycle by itself on the 1-hour chart. Now, the first leg is a beautiful cycle, no doubts. Right? We can say this is a triple. There are many ways to draw it actually, but it all would be correct. It's a triple or a special, doesn't matter. All would be correct. The second one is currently nothing. It looks like double, but there is no divergence. Here, there is nothing. Therefore, the 1-hour chart is not yet ready for us. So on the short term, there are yet no new opportunities. Okay, so this is basically how we have the control over the position. Are we in the conditions for short term? Well, the level is pretty good. It's top of the possible range. Divergence is there on the 4-hour, but when we go to match the lower time frame, or sorry, not to match, but verify the lower time frame, we find it's missing. And it's very, very important, as I always say, when you match this, define what time frame you're going to trade. If you rely on the weekly cycle, 1-hour chart has nothing to do with that. You don't want to find yourself exposed to the 1-hour chart noise when you expect a weekly cycle, right? It doesn't make sense. And it's a recipe for mistakes. If you trade only for short term in that case, then you have to verify that correctly. What cycle exactly are you trading? If it's based on the daily range, okay. So if it's a daily range, 4-hour must be cycle inside the range. It is. And it has to be verified by 1-hour chart, and it's not. And if it's not, we have two normally, right? Choices like traders, or to force it, and then to convince ourselves, but it is there. Well, it's a good resistance. Well, it's a good trend line. Well, million of different things, right? Or the better way is to say, okay, if it's not there, I wait for clearer signs. And what are clearer signs in that case? Or get the next high and the next divergence to be completed, or verify some false breaks and lower lows, or verify a bearish trend first of all, like 3 lower highs, 3 lower lows, and then look for possible sell the rallies. But verify first, right? And this is very, very, very important, because let's admit it, there are millions of ways we can convince ourselves, or we can find to force the market to match what we expect to see. Million of ways and methods, right? And before we apply any kind of methods here, that's why very, very important, let's, like I always say, trade facts. And the facts are that you don't have a match in the 3 time frames. That's a neutral condition for the short term. So once again, our plan is for the sell, but we can easily see that continue to climb here, completing these 2 waves, or going back to the top of this range, right? Before we actually see the turnaround happens. And define what cycles do you trade. If you are for the weekly, then this is your trend line, because this is the double cycle as it develops. If you start to drop lower, that means you ignore the weekly signs, because this is the real corrective cycle within this daily range, not this. This is good for short term, not for the long term. And it's very important to understand that these little definitions, so you are able to do the right conclusions. And Catherine, thank you very much for your good feedback. So our euro pound plan for long term is looking for sales. For short term, it's not ready, and that's what makes it very possible to make this spike higher for us before we actually see the signs for the turnaround. Euro Aussie, this is a long-term trade for us and a very important update. So what do we trade on the Euro Aussie? This is our trade here. So we are after two waves, as you know, or a range, right? Basically, we are in corrective cycle currently. The last divergence from weekly is bearish. The momentum is bearish. As mentioned before, to be able to trade a weekly, we have to make sure daily matches. Daily looks good for us. We had the first move, then we had a range, then we had top bounce from top of the range, right? False break, and all the rest is history. We are dropping there very down. Now, pay attention on the same idea like we discussed on the euro pound. Take a look on how it develops on the euro Aussie. That was the 4-hour chart trend line. Daily range and a 4-hour chart trend line. Since it was broken, the long term is back to be relevant. Before that, all this situation here was available for trading, but only for short term. This is exactly the same like what I explained before on the euro pound. Same exactly. Okay, so you do want to pay attention to that, guys. So what do we have on the euro Aussie? We had the first leg, a range correction, and a continuation. Now look what happens here. The pair possibly developing here some bullish divergence. Also on the slow down here, it starts to smell like a very possible correction. Looking on a 4-hour chart, that means we are going to be exposed very likely for short-term fights. What does that mean? That means we could easily see that developing two waves before further sells. That can easily mean that we are going to be exposed here for some kind of ranging continuation before that happens. Why it's important to understand? Because when you say, okay, I'm going to ride for a long term, and tomorrow you wake up and you see this doing this, what is the natural reaction from a trader? Hey, how come it rallies? Right? That's how we react, or at least that's how I used to react. Right? Or yeah, Catherine, the WTF word, of course. Right? So that's pretty much it. That's the reaction. We easily forget that the long term means long term. It doesn't mean we wake up tomorrow and it has to be 1,000 pips lower. No, it's easy to forget because, you know, what is the wish of ours? It's always, of course, to wake up for a good profit and say, aha, I told you it's going down, right? That's what we always wish, but in reality, it's not always this way, or most of the times it's not this way. So it's important to understand that it doesn't change the fact that if we are going to be exposed here to any kind of correction, it will change the long-term plan. It's not. So can we actually go and trade a short term to the upside? The answer for that, sure, if you can verify your cycle. How do you verify your cycle? You drop the Fibonacci levels. Are we in any of the cycle? No. Well, if we rely on the spike. In that case, we can actually not rely on the spike. Why? Because it's one spike. We don't have a trend continuation here after the spike. So it's one-time appearance. So if we drop to the official high, which is here, we are on critical zone, 61.8. So can we? The answer is yes. We have the divergence there on the histogram. We have the 4-hour chart to be cycled by itself on each of these legs, right? So we can actually go and see possible fights. And that means every drop with a bullish evidence like this, verified by 1 hour chart cycle. Remember, 3 time frames, right? So if you see this verifying you the 4 hour chart cycle, you know you can go and look for these reactions. Make sense, guys? So that's, again, very, very important, is to ask yourself, from what do I trade? From what time frame do I trade? And what cycles do I work with? If you work with 1 hour entry based on 4 hour verification to daily cycles, then your management automatically is for short term, from day to day. It doesn't mean your trade is going to be started and finished within the same day, scalping, no. But that could take 2 days, 3 days, a week, 2 or 3. But it's short term. If it's for long term, then the view did not change. We are bearish. And every short term reaction that might go and happen would be still considered as a short reaction. This is the long term expectations. Okay, so this is very, very important how to approach it. So to sum it up for the Euro Aussie, our plan for long term is bearish. For short term, we are very likely to be exposed for a fight. I think there is a good chance we are going to see something like that. And the reactions. So bullish reactions on the short term are very, very acceptable in this structure the pair has for us. Next one, Euro versus, I have it here, EC. Oh, CAD. Okay. Euro CAD. Right. Another great one for explanation. So our long-term plan here is sell. Why? Triple cycle, expecting 50%. So basically this. For long term, we are bearish. Short term, we will discuss in a second. So our long-term plan was bearish from the monthly. This definitely verifies that. Triple cycle down and a range. Our plan, every rally, look for sells. As simple as that. Daily must fit in. Now, the last divergence from the daily here is bullish. So at that very moment, it didn't really fit in. The reaction from that could be 2 waves up or a range. And we can see that on the 4 hour chart. Here is the 4 hour chart, and here are the 2 waves. This is our follow-up. This trend line has to be broken in order for us to start looking for sell setups once again. So that's what we want to see. Break of the trend line and lower. And now here comes the question. Can we or should we? Could we or should we? Or would we? No, just joking. Could we, should we go to 1 hour chart and look for that, for example? But it broke this trend line. So can we enter here a sell? Yes or no? Who can answer me here? Should we or could we go to 1 hour chart to trade the long-term cycle? Yes or no? Two and two. So we have 2 yeses, 2 no's. Who else? Who else wants to try? We have another no. Another no. So beautiful. 4-2 now. Good. Another no. 5-2. Thank you. Sean, you are beating it. All right. So why no? Because again, as explained from the Euro Kiwi and the Euro Aussie, when the first definition begins where, guys? Always by definition for cycles. What cycles we work with? We just defined we are working for the long-term cycles, right? Well, with this setup, 1 hour chart has nothing to do with the short term. If you would want to trade 1 hour, then you would have to make sure you have a good cycle to trade on a 4 hour and a daily combos. Now take a look on a daily. Do you have any cycle to trade here? If you trade only the daily, then it's likely for the buys after these two waves down and divergence, right? Bullish divergence. So it's for buys for the short term. But if you are trading for the long term, the 1 hour chart has nothing to do with that. Therefore, this is the plan. 4 hour chart, two waves, and we got it beautifully setting right now. Each of the legs looks good as a cycle by itself on the lower time frames. It's pretty obvious here. So once this breaks down, we want to start looking for sell setups. Keep in mind, why can't we go with the trendline breakout? First of all, we can, but the problem is normally for most traders in such situation is the big stop loss. That's something that affects smaller accounts. For such cases, when you have a big stop loss, remember, the bigger your stop loss is, the bigger the moves you ask to see from the market in your favors to be able to cash out. And the more you ask from the market, the less probability it will give it for you, right? Because if you ask from the market 200 pips, it might say, okay. If you ask from the market 800 pips move, that might say, you know what, wait for the other time. Right? So the more you ask, the smaller the chances you might get it. That's pretty much it, right? Just simple logic. So that's pretty fat stop loss here. And normally after such big wide ranges, you do want to get some retraces for a sell. So this is our follow-up. We are looking for sells, and this is our trend line to verify the trend continuation as we see that as for now. And on the shorter term, could that continue to go slightly higher? Of course, nothing prevents it. Why not? Does it make sense to trade it? From my point of view, no, because there are no obvious cycles that we can combine from daily and 4 hours. So personally, for me, the answer is no. It doesn't mean it's wrong. It just means from my point of view, it doesn't make sense. And the chances are completely 50-50, which are very hard chances to profit from on the short term. So that's pretty much it. EuroCAD, the idea is to go for sells, and that would be relevant after the corrective trend line would be broken. Top of the daily range, yep, that's actually a good one, Roberto. This would be a very serious possibility. Top of the range, as we had this hold, right? 1, 2 false breaks here. It became a range, so top of it. And also it would be bend to bend movement, right? In the Bollingers. Would be classical opportunity, definitely. Once again, those who are exposed to all my terms for the first time, you have pretty much all the information you need in the webinars, step by step. So the EuroCAD, we are after sells. Euro Kiwi was one of our best shots couple of weeks ago. Was this one? Was the bullish hit and divergence? The idea here is simple, pretty much. We get the long term is still bullish with this divergence. So our plan is this. Why our plan is bullish? Because we had a triple cycle up with 3 higher highs, higher lows, and then double cycle down. So pretty much the idea is for buys. We know that daily has to fit in. Daily fits in beautifully by making this higher highs principle, right? After the here, breaking it. Okay, and it's not just one straight movement, it is a triple higher highs, higher lows from the lower time frame. So our idea is get the corrections, look for buys. Can we trade the corrections? Yes, just remember it's aggressive approach because you are against weekly and daily divergences and cycles. By saying that, you have to remember the whole idea here is short-term and aggressive. And the risk for aggressive trades should be adjusted accordingly. Okay, guys, very important to remember that. Now, what do we have on the 1 hour chart? Basically, the nice structure of lower highs, lower lows. So we can basically look for short-term retraces lower, which after we would want to go into buy, right? So the cycle is coming from the 4 hour. We want to see 1 or 2 or any kind of a range, and then looking for the next buys. Could we see the 4 hour chart retracing and making one more false break? 100% yes. No specific rules to know when exactly the correction would begin. And that's why it becomes more aggressive, because we're against the daily and the weekly forces. The 4 hour chart could go and be annoying before it actually retraces. We do have the view currently relevant for the corrections, as I just explained here. So you do want to see some kind of 1, 2 or good hidden divergence provide you for a sell, right? And then this, for example. Okay, why it's important to wait for this opportunity? Here is the answer for you. Right here, it was kind of this measurement. That was we got previous week. Since then, we never managed to get any 2 waves retrace. It was 1 wave, and then it went through the previous high. That's why to wait for the setup is very, very important. You know that, but this was just a little proof why it is important to wait for a fact. Fact is a setup, and not just say, oh, okay, so I can go and trade sell because let's say we expect a correction, right? It's very, very important to understand, guys, especially when you trade against higher time frames. Remember what I always say, guys, very, very important. When you trade in conservative market conditions, you can allow yourself to be more aggressive with your setups. When you trade aggressive market conditions, and that means against higher time frames, you will want to be more conservative. Make sense? So that's for the euro versus the kiwi. Another beautiful, if you ask me, trading opportunities. And by saying that, the long-term traders of you who joined the long-term buy, this was the trend line we were talking about. It's a beautiful place and time and the risk reward to go and get partial cash out, stop loss to break even, just in case you still didn't do it. You know my approach for management. Do not let a winner turn a loser. When you see signs against you, act. Any kind of action. Partial cash out, full cash out, and looking for re-entries. Stop loss to break even, at least. Trail your stop loss according to swing lows. Everything that you apply with your strategies doesn't matter. But when you see signs against you, act. The market is telling you a story, right? We all would wish to wake up and see, boom, a skyrocket. But the chances for that are always against us. The times the market is skyrocketing are 0 compared to the times it's zigzagging and making it much more annoying. Remember that. So the next one and the last one from the euros is the euro versus the franc. After completing the turnaround from previous week, now I just want to remind you, I was looking for possible sells with a trendline breakout for one more low. The idea was completely wrong. The good part is that we never got a trendline breakout, so we never got involved in sells. And the idea itself was completely wrong. But since then, we moved here in a 3 higher highs, 3 higher lows. Now it's getting extended. We call it impulsive waves. For all those of you who are into elite waves, not myself, I'm not a good elite wave trader, I admit. So don't ask me questions related to that. I'm not the right person for that. So what we have here is an impulsive wave. Basically, what is impulsive wave by its definition? Each leg, well, the way I see that with cycles, okay? Elite waves explain it differently, but the way I see that with cycles is when you have your angles increasing. So you see that slowing, faster, fast, or skyrocket. That's pretty much what we got here. Boom. So where do we expect a possible correction from, and what's the idea? The idea is very simple. We are after buys. We have the weekly bullish divergence. So our goal is this. The daily fits in beautifully, turning around this extreme, holds the V pattern, which is again verification for possible bullish continuation. Look what happens currently on the daily chart, bend to bend, Bollinger to Bollinger. We have webinars about that. Lower time frame, what we have is trend line coming soon. 200 moving average here for long term. It's a very nice dynamic resistance when trends are tested. 4-hour chart, we just discussed about it, right? Oops, sorry, wrong button. By the way, for all those who ask me, how do I draw on the charts? The answer is very simple. It's a program, free program called Epic Pen. Okay, you can download it for free. Just Google, not from any. It's not my development. Okay, it's online. Wonderful solution. I have the paid version. It's pretty cheap. It's about 20 bucks, and it's wonderful because you have many more solutions here. So take a look. You have white screen, black screen, no screen. You have all the possibilities for patterns. Very beautiful. For all those of you who love to prepare plans for themselves and they want quick solution, it's a wonderful solution. So for all those who always ask me how, this is how, Epic Pen. So what do I want to see is this approach on daily chart is bend to bend, slightly higher, around 113.60, 70. The trend line we just discussed before is even slightly higher, 113.80. 4-hour chart, when we measure the expansion, we can figure out we are already past the 161.8. So the closer we can get to 261.8 here, these are the stop loss cleaning zone. What are the stop loss cleaning zone? For all the traders that try to attack, sell here and here and here and here and here, they use stop losses normally above last official highs and lows. Nothing wrong with that. It's just wrong to do it wrong, right? It's just not good to do it wrong. And what does it mean to do it wrong? It means to trade, to ignore the higher time frames story. So these are the critical levels. Assuming the market would be strong enough to go and erase them, once they are cleaned, we can start looking for the short-term retraces. And our long-term plan is a buy. How do we verify a reversal on the lower time frame? You already know that. Lower false breaks, right? False breaks and lower lows. We call that convergence or convergence principle. And after that, we can start looking for retraces, or by pure price action, definition of a bearish trend, lower highs, lower lows, sell the retraces. Okay, that's pretty much it. That's my European list. The fastest list of all the other currencies is the European. That's same picture for about 3 weeks now. Well, we are following what the market gives us, right? The European are very beautiful lately, so that's where we trade. Questions, guys, about anything I explained so far? If yes, hit me. By the way, I'm having here a coffee with cardamom. It's some beautiful, tasty spice. Very much recommended for all those of you who love coffees. Turkish coffee with cardamom. Amazing. All right, so it looks like, yeah, it is, Catherine, it's delicious. With a bit of a stevia, I don't love too much sugar. I'm fat enough. With a bit of a stevia, perfection, especially at 2 p.m. All right, let's move on, guys. The next one is the pound versus, we have the pounds pairs, okay? We have 2 pairs of the pounds, actually 3. The euro pound is also pound related, right? It's not pound dollar. I don't have a clear picture of the pound dollar. I'm sorry for that, but we do have pound franc and pound CAD. Let's start with the pound franc. Long story short, I'm bullish here, as you know. It's not a secret. I think the whole community knows. I'm speaking about it for I don't know how many months now. I think half a year or so, right? Get ready for the buys, get ready for the buys. That's where we got the buys, with this beautiful turnaround. So what's the idea here? Triple double. I assume this is going to be the first leg from the monthly chart. Correction, second leg. Now this is for a very long term. Of course, most of the traders here are not interested for that. Logical, makes sense. We want the profit. We want the profits here and now. So what do we have on the shorter term view, and how could that be developed from this point? So we agreed on the long term, right? We're bullish. Our invalidation would be the last official low, which is here. Pretty far away, big ranges. So can we really, for all those who just exposed to that for the first time, can we really go and risk something like that? Well, theoretically, yes, if the risk reward is good. But as I said before, most of us don't really want to wait for so long. So we want here and there, here and now. The here and now gives us some kind of warning signs. Follow here. This is a triple cycle up. Descending. Right? The legs are getting smaller and smaller. After such case, we are normally exposed to what? Corrections. Corrections could be to waves or a range. In that case, because we are in a bullish trend already, it could also be a bullish hidden divergence, which it is here and here. Now, for all those who think, but Vlad, this is a bearish convergence, you guys are 1,000,000%, not 100, 1,000,000% right. So how can we spot a difference between the bullish hidden divergence and the bearish convergence? First of all, they both give you the same idea for the short-term reaction. Why? Because after the bearish after bearish convergence, you want to see pullbacks before you sell. And what do you want to see after bullish hidden? Continuation up. So this move up reaction is shared for both. But how can we decide, is it a bearish convergence or a bullish hidden divergence? The answer is always the higher time frame. Define the trend. And we just did. The weekly is bullish. So we are after buys. Therefore, for us, it's a bullish hidden divergence. Now, does that necessarily means we cannot get exposed to one more push lower? No, it's not. It just means that for long term, look for buy dips is much stronger than for short term, look to sell rallies. That's pretty much it. Remember, trading is all business of statistics, probabilities, right? Probabilities and your odds, your chances, right? So that's what it is about. The last combo is bullish. Now here comes the trick, or not trick, here comes the potential trap. This was the first leg. We are after one leg correction. So yeah, theoretically we can go and fly. But there is a good chance, especially when the day develops possible signs against, like this possible bearish hidden divergence. If it is verified by lower time frame, we might get this done before the long-term continuation up. You follow me, guys? So how do we actually approach that, and where do we find these trap signs? First of all, as I just showed, the daily bearish hidden divergence developing. Second, take a look what happens on the daily chart. The whole month or more now is stuck inside these two candle range. When the whole month is stuck inside such range, this is what? Normally a weakness. A weakness, a sign of weakness. or evidence for weakness from the controlling side. We assume this is a bullish control. So why can't they break out of this little range, right? This is where our traps come from. Now, this plus the possible daily bearish hidden divergence and the 4-hour chart that slows down with double wave here and here and here, possibly in this consolidation. Would you really want to risk all your money on something like that? The answer is no. What I mentioned before, and I always mention, when the market gives you signs against you, listen, act. Trust me, you better cut a position and look for next opportunity rather than find yourself in the regretting place. I myself did this mistake so many times in the past, so trust me, it's painful. When you have a winner and tomorrow you wake up and say, oh, crap, sorry for being rude, but when you find yourself in these emotions are so high, and when the emotions are so high, the decisions to go and make some wrong entry, wrong assumption, wrong decision and conclusion for any other trade are very higher. The emotions high, the mistake probability is higher. So you want to avoid that. How to avoid that? Listen to the market. Trade facts. This is a fact right now, right? We are not making it up. That's a fact. Daily developing possible bearish hidden 4-hour proving that. So can it fly? Yeah, the weekly is still bullish. But most likely, and again, there is no warranty for that, but most likely we would see some fight here. And this fight could be still within this consolidation. Nothing wrong with that. And this fight could be the second daily leg. And it will not change nothing from the higher time frame. Because the higher time frame invalidation, and I want to remind you, is here. That's the whole story the market has for us. So pound franc, for long term, it was and remains bullish. For short term, we might see that slowing down a bit. We have some critical zones right here and slightly higher around the area of 132. We would very possibly see the pound franc trying to make short-term retraces before the long-term buys. Can we go and trade them? Yes, of course. If daily and 4-hour will fit in terms of divergences and cycle zones, then you can go to 1-hour chart and start to verify that. Verify the short-term retraces. How? False breaks, convergences, or triple over highs, triple over lows. Same principles I introduced everywhere else. Make sense, guys? And for long term, first of all, for all those who run the buys from the very long term here, there is no need to change anything, not to add, not to take parts. We took parts here, profits. And for all that are looking for good opportunities, remember, you want the daily to be with you. Currently, daily developing bearish hidden divergence. So we assume there will be some correction, and if there will be, and when it will be, then you would want to go and buy. So that's for the pound franc. Long-term buys. Short-term could provide possible reactions down, closer to the zone of 132. Okay. Last one is the pound versus the CAD. Long story short, we do not have any cycles to trade here, but we do have the trend verification. These are higher lows here. These are higher highs. And mainly, that's what we get here. Where is my daily? Here, my daily. So the daily continues with its structure. That was the higher highs and higher low structure here, higher lows, higher highs, right? Then we change the angle a bit, this and then this. Okay, the last divergence available on the daily is bullish hidden. Weekly has nothing against, we just show that and prove that. So we are after buys, and our last buy was activated right here previous week. That was the 2 waves down. And again, why not here? because first of all, we didn't ever have a good two waves here, it's just one straight wave on the 4 hour, and because we are trading here with what we define a trend from the weekly. So why would we go lower, so low on the second leg to try and verify that? We can't, we shouldn't. So we got a breakout, we got a retrace, and we got this beautiful setup. Then after the 4 hour chart verify that, we can go to the lower time frame, and the lower time frame, here we go, working pretty beautifully, making the correction down, erasing the stop loss area, right, the early attacker stop loss area, and continuing higher. That's pretty much it. Should we see anything changing here? The answer is no. How do we need to manage that? Since the entry is based on the 4 hour one, once the 4 hour makes this a bearish divergence, and I say once because as for now we have no divergence, only potential, right? It didn't tick, it didn't nothing. So once, and if it becomes a bearish divergence, then the management should be applied. Partial cash out, stop loss to break even, anything you do with your strategies. Okay, makes sense, guys? So that's pretty much about the pound CAD, and the rest it's only for partial, right? Because higher time frames are with us, and the rest to continue to run. Questions about the pounds? That's pretty much, again, there are many more pounds, but I don't see anything clear there, and that's why I don't discuss about them. Okay, so I discuss about the two that are pretty good from my point of view. Euro pound we also covered. The rest, for me, just for me, it doesn't mean for everyone, just for me, they are not obvious, not clear, and I prefer not to take risk then. Perfect. Let's go further. Australians, Aussie dollar, my long-term view is bullish, you know that, no secret, right? I'm bullish here. So after buys, weekly, beautiful, with me, bullish divergence, triple cycle, I expect this. Daily to be with us, daily was with us, daily broke the trend line a couple of weeks ago, then was very slow, still nothing really against, only trend line that could cause some problems, could cause some fights, but at this stage we do not have any warning signs as for now, so the idea remains bullish. On the 4 hour chart, that was the place where we became bullish, sorry. Triple up, consolidation, some fake attempt, and then a real attempt, and a rally. Now we have some slowdown, we have divergence, we might be exposed to corrections. Corrections could be in two waves, corrections could be a range. Okay, corrections could be for bullish hit and divergence, nothing wrong with that. We have a trend line here, right? This looks like some kind of a channel movement, so retraces and buys definitely look like a good thing to do. Aussie dollar remains long-term buys for us, with looking for buy, with continuing holding our buys from this place. No, oh, it's moving. And yep, now it's definitely a place for cash out partially or stop loss to break even, right? Risk free and so on. Management part, what we call management part. And the rest have to remain bullish because the higher time frames are still bullish. Aussie Kiwi, same story. We are after long-term buys. Quick update where it all comes from. This, of course, now we are in the bottom of this range. Weekly is this. There is bullish divergence there. Also, it's in a range, so we are bullish. Lower time frame, like daily, we had this convergence. Now look, remember how many times we were exposed to possible false breaks and so on. Only here we got the official false break and official higher highs, only here. And since, boom. Now what do we have here? Bollinger Band duplication, stop losses area, Reminder, what stop losses area for all those who locate their stop loss above the last official swing high. Early attackers, early sellers, those who don't believe the higher time frames, those who are selling here and here and here and here and here. All those who say it will be fine. Well, maybe it will, right? But it will be based on luck. Based on statistics, it will not. Most of the times, it will hit the stop loss. So what we want to see this clearance area that's around 106.60, 106.70. By ideal, we should visit there. This is the critical place. This divergence would make the impact. We would be looking for new highs with sells and then look for buys again. So long term we are bullish, short term we are after possible sells. Now for all those who dropped a 1 hour chart, can we or should we do that? The answer is no. Why no? Because if you drop to 1 hour chart to enter, daily must be cycle. What cycle exactly do you have here to trade on a daily? You don't. It's a straight move up. So you want your 4 hour to become your cycle, and it does. Right? We are fighting and dancing around the 61.8. We are, well, first of all, we can take a look here. You have 161.8. You have the bigger view with 61.8. That's where the levels are so critical here. Right? Then each of these legs would have to be cycled by itself on the 1 hour. You can go lower and verify that, no problems. And then turn around. How do we verify turnaround, guys? Remember, false breaks, lower lows. Then, of course, 1 hour could be available when the 4 hour is completed cycle. But remember, it's extremely short term because daily has no cycles against you. With you. So everything here is very, very short term. And because of that, the risk should be accordingly, which means tiny. And how do we verify reversal, false breaks, lower lows, or pure price action movement, lower highs, lower lows, and sell the rallies. So that's for the Oz Kiwi. Very good level to start looking for sells as right here. I assume we are getting there closer, and then slow down, and then prepare the next portion. And the last one of the Aussies is Aussie franc. That's what we have here. Aussie franc, long term, very bullish. So this is what I expect. Short term, well, maybe it's funny to call it short term, but shorter term is with us. Bullish divergence is the last one. Daily also verifies that with the last divergence it was bullish. And here we go. Now we do have some resistance zone. So we might see some fights here for the short term, but our plan was and remains holding the buys. We had several opportunities for that previous weeks. 1, 2, bullish hidden, bullish hidden. Each of them provided us a beautiful continuation up. So every pullbacks we get as a corrective cycle, we are after buys. Okay, that's the Aussie versus the franc. Can we look for sells? Always remember, if you do, you want to make sure this is the first cycle leg you have, this is the second, right? You have some critical zone here, right? Remember, if you do, you must remember what cycles do you trade. If it's only 4-hour chart, you have to remember it's very short term, and because it's against the higher time frame, then your risk has to be accordingly small. And you have to verify that each of the legs to be cycled by itself on lower time frame, and verify the reversal, false breaks and lower lows, or the price action principle, lower highs, lower lows, the trend change, right? And then sell the rallies. So watch that out for Aussie franc. Kiwi CAD. Now this was a very good call of ours previous week. Actually, last few weeks we were selling, then short-term possible buys, and now get ready for next sells. This is from the last report. Just want to remind you the plan. This is our zone, retraces and sell. So this is pretty much what we're facing right now. After this triple movement, double wave correction, and looking for sell setups, right? So let it complete. We need 2 waves or this range. Let it complete, and we will be looking for the next sell setups from there. So the short term we expect still to fight, possibly push slightly higher. For the long term, once it's completed, we are for sell. CAD franc, our plan is this: short-term retraces, buys. We are still in the zone, still expect short-term retraces, and then buys. Where it all comes from, my long-term view is very bullish. Weekly has nothing to support currently. The only thing the weekly does have is this kind of structure of 3 higher highs, 3 higher lows. It's not a triple cycle, it's just a structure. The disadvantage of that is we are stuck within one huge candle of the weekly. We all remember what happened in 2015. Well, most of us remember, if you've been involved with the franc, right? When Switzerland released their floor, their ceiling, sorry, against the euro 120, it shook the market. So the weekly doesn't really have anything to support the monthly assumption, but it doesn't have anything against. Daily was a triple double view here. 3 higher highs, higher lows, 2 waves down, and trend line. Now that the daily has signs against, this is a bearish hidden. Well, from this high, it's a bearish hidden. So we do expect short-term retraces. They are definitely possible, right? This is what we are facing currently. So we can see 2 waves and then rallies again, expected, or we can face any kind of range. So our long-term plan remains buy retraces with bullish evidence. What is a bullish evidence? Bullish trendline breakout, bullish divergence, bullish turnaround with higher highs, higher lows to be created. Dollar yen. After the break of this trend line invalidated, it was a few weeks ago, invalidated the sell plan. Since then, I personally am neutral, and I'm still neutral. The momentum is bullish for all those of you who trade the short term. I am away for one reason. The weekly is building up a possible bearish hidden divergence. Daily is building up 2 waves, possible 2 waves with a bearish divergence. So what I want to see personally, again, ignoring the spike as it's one spike only, we don't have a trend continuing lower. This becomes a critical level. This and then 114. I assume we're going to fight here. We have this trend line, divergence. So I want to see the 4-hour chart coming closer, and this is what very likely to happen. Then this to become divergence as well, and we'll start looking for the sells. So dollar yen, I'm neutral currently, but as we come closer to the critical level, 112.60 and then 114, around these areas, we'll be looking for sells. Dollar franc, we are with the weekly divergence, so daily to be correction. Daily correction means two waves or a range. We have the definition for a range, two false breakouts, so we can definitely move inside it for a while. We can still also develop two waves, no problem. Bend to bend, 4-hour chart, double cycle. First leg is triple, second leg is developing triple. Stop loss zone 1, stop loss zone 2. What stop loss zone? Place where traders locate their stop losses. The early entries, right? Those who enter very early, locate their stop losses right here. We should clean that and be able to see the dollar franc making some kind of retraces. The closer we are to the top of the range from the daily, the better, the bigger the chances we are exposed to possible correction. For long term, the plan isn't too obvious at this stage. I myself am very bullish. I want to see this. One more low with bullish divergence and buys. Will I get it? Can't say right now, can't judge because the correction is not deep enough. That's from the Forex view. And we have three last instruments at this stage that follow up, gold and silver. So previous week we wanted to see the gold making the higher highs after these false breaks. We wanted to see the higher highs. That's where we became bullish. We got a beautiful rally here. And once again, the proof. This is the best proof of what I was speaking about before, guys. When you see signs against, manage. Because it's too easy to get here in love with the idea of, oh, now I'm going to be multiple millionaire by catching these buys. But the market has signs against you. When you do have that, manage. The management is at least moving yourself to break even. Why? So you don't wake up to such thing where the move goes lower. Does that change any of the bigger picture? No. No, because the bigger picture was and still remains looking for the buys. All good. Just shorter view might correct deeper. So what do we expect from here with the gold? It could be a triple bottom. We might slightly see that going and push lower than that. What we want to see is daily ticking for the next divergence, 4-hour verifying its divergence, ideally something like that, and then 2 time frame verification. We are after buys. Silver 1-to-1, same story exactly. Developing this second leg, as the first one was short-term rally only, never got more than that. It does not change the bigger picture. It's still bullish with the histogram divergence. What we need is the last leg of the daily to fit in with the last leg on a 4-hour chart. Ideally, once again, something like that. And then 2 time frames cycles and verification with divergence. We are looking for buys again. Our long-term plan was and remains buys, buys, buys. And the oil, which sits on a critical level of 64, 65, I expect here a very serious fight zone. You see here the magnet zone. The only thing that we are missing on oil currently is false breaks and lower lows, right? So we never got a false breakout yet, so we can't go for convergence. So the only thing we could verify here is by making lower highs, lower lows. That's what we want to see, right? Lower highs, lower lows, and then we can say looking for the sells. It's not there yet, so there is no setup yet to go and be dealing with sell for the oil. The level is there, the divergences are there, the opportunities should arrive, but we cannot just based on that, say it will be fine. Wait for a fact. As for now, there are no facts at this stage. Wait for a fact. If we have it, we know what we want to do with that, right? And we have it in one of the simple two options. Turn around after false breaks and lower lows, convergence principle, or 3 lower highs, 3 lower lows. We currently have none, so we can't make any action. Does it make sense to buy here though? I never go against higher time frames. Daily is bearish divergence and a cycle, weekly is bearish hidden divergence and band to band movement. I never go against that. Maybe the buys can still work out. I never trade against such things. Personally, yeah, that's my approach. So, looking for sells for oil, but I do want to verify the turnaround at the first stage. That's the list as for now, guys. Nothing I can see currently from indices yet. We're on the waiting mode and zone. Nothing currently to do. Waiting for setups. Any questions about anything explained so far? Just want to remind those of you who are not with us yet in the Telegram group, join us in the Telegram groups. You have the links in your emails when you joined, or if you don't, please contact support team and they will help you to join us. All our chat goes there 24/7. Me, my team, all our veteran traders, all the experienced traders, all the long-term experienced members of the Traders Academy Club are there to assist. That's all for today, guys. Sorry for taking it longer, but we had a lot of things to discuss, so I wanted to make sure everything is clear, explained, covered. The report will be sent once it's ready. Once again, thank you very much for being here. I wish you a wonderful trading week. Keep in mind, this is a shorter trading week as it's Easter, long weekend coming on this weekend, so it will be shorter trading week in terms of volumes and so on. So once again, welcome to our family for all those of you who are watching me for the first time. I hope I didn't scare you too much. I'm just joking, of course. Step by step, guys, we're there for you for every single question. So take it easy, step by step, ask, practice, develop, watch, and give yourself a real chance and time to digest the things you just saw. We're talking here the real things, not the wannabe things, and that's pretty much it. Thank you very much for being here, guys. I wish you a wonderful week, day. I'll see you around. Bye for now.